Hey, good morning. It is Chris Suarez, and you are with us this morning for Coffee and Chris, Mondays at 10 o'clock every week, to give you lots of information. And I just saw a comment pop up that's the wrong information, so we'll have to remove that. Anyways, we are here with Terri Bishop, and she is an accountant and here to give us some information on some questions that is most commonly asked of her. Um, so, we do this every Monday. And so we have either an expert on that's in their field, not mortgage related, not necessarily real estate related, none of that kind of stuff, but just to give people information of stuff that, you're wanting to know and outside the realm. And again, just educate people all the time. That's what I enjoy doing. So we're going to talk about capital gains, when you sell a house and what, or if it pertains to anything else, I don't know. But anyway, so capital gains. We're also going to talk about tax refunds. So in my post a little bit ago, so tax refunds. So I've not received a refund in probably 30 years from, since I've been married and had a couple kids and all that kind of good stuff. So I've not received one. So Terry's going to tell us, that is a question that she's asked, is why the heck is my tax refund dwindling down? And then also gambling. So if you've gambled and you've won money, then do you pay taxes or whatever the case is? So lots of stuff. And if we've got time, we may touch on some other things as well. So we're going to jump in on it. So Terri, tell me what I'll post on here your contact information. And so tell us what you do. Do you do all kinds of taxes, everything else or whatever, what you do, and then we'll jump into the questions.
Okay. I've been in the field, started in the field at 17 years old, doing basically the bank reconciliation for companies and things like that. As I worked for the company, it was an individual that owned the company. She taught me how to do more accounting, and I went to school at that time. So I've been in the field pretty much forever. I'm 56 years old, so I started at a very young age. She decided to go into the politics, so she sold the business, and I bought half of the business from her. I've owned that for 29 years. I keep it very simple. I work from which I love because I can walk out and be with my animals. I live on 5 acres with horses and dogs, and I have a monkey and so um I've got a pretty, you know, long background. I have my BA degree in accounting. I never sat for the CPA exam. At that point in my life, I was having children and a family, so I never studied and sat for it.
Mhm.
Don't need to. For what I do, I really didn't need to do that. I do small businesses, um, help them get set up, give them strategies on saving their money, putting it in back into the company, capitalizing, making the most of it. I do their books monthly. I also do corporate tax returns and individual tax returns. I've sort of gone into the field where I specialize with police officers quite a bit.
Hmm.
Um, we had talked about why is my refund not so large right now? Times have changed. In 2017, a lot of people could take their employee expenses, such as their uniforms for nurses, the police officers, their uniforms, their boots, their guns, um, along with people that worked at home in an office. They could take part of their internet, part of their telephone, part of their electricity, an office space for realtors that's, you know, use part of their a room in their home. They could take those deductions. Well, that was the last was in 2017. In 2018, they went to a higher standard deduction, a higher personal exemption, and did away with those expenses. But there is a deduction for governmental officials and also military based. that they can still take their uniforms, their food allowance, because police officers are on the road, um, their training and things like that, that they have to pay for.
Hmm.
So those are some of the, that's why I sort of went into working with the police officers. Word got out that I knew that where that deduction was.
Right.
So now, as you said, you haven't received a refund in years.
Where's
The
my money?
Yeah, where is our money? Going to our stimulus checks. So in 2017, they did away with those deductions, which would have helped you because you're a smaller based, mortgage broker, where you could take some of those expenses. As your husband also, he could take some of those expenses, and that would help you get at a lower tax rate.
Mm-hmm.
They are, when you fill out your W-4, sort of skipping around, sorry. When you fill out your W-4, they ask you, are you married? You single? And it used to be you put married and and they'd say, how many dependents? And you'd put maybe one, two.
Right.
Well, now they changed it. And it's very, very confusing. We have many calls on this. You put married. Okay. Do you have another job? Yes. Do you have how many dependents? Does that dependent work? Do you have another job? And they go on and ask many questions, and they determine what should be withheld on your job that you're filling that W-4 out.
Mm-hmm.
Sometimes if you don't understand it and you put yes, you end up either exempt with no tax being withheld. We've seen that where a
Right.
gentleman paid over $100,000 and had no tax withheld at all. Yes, it was a
Not
little,
pretty.
no, not for him. So I always suggest marking married, no, 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 zero. So they withhold the most tax that they can, and you can use it sort of as a savings account.
Mm-hmm.
They also, since 2018, they started raising that tax rate slowly. So nobody really knows it. Your refund just gets a little less, $500, $1,000 less each year. So you're going, why am I getting less? Oh, I made a little extra money. Well, that's not necessarily, they're withholding less because of the new, how they made that form. People are not realizing it, having a little less withheld. It's going into your paycheck each week or each month, every 2 weeks, whatever your pay
Right.
system is. So it's going into your pay instead of you getting the big refund at the end of the year. They have been doing it since 2018. So 19, 20, and 21, it goes less and less and less. The government's goal is to have everybody either break even or pay the IRS and owe the IRS. They have now gone into, because more and more people owe them and can't pay them because they're not expecting to
Right.
owe, they are going into having collection agencies call you.
Well, and that's funny because I have noticed, and I've had to change my questions that I ask my clients up front. Do you owe IRS money? Because that's a debt that I have to include against your debt. And so with what you're saying, that answers my what the heck is going on? Why do all of these people owe taxes now that they never did? Like, I've never seen as many people owe taxes that they do now. Like, it
And
is
probably
literally one of my upfront questions now.
a large amounts also. It's not
Yeah.
like you owe $500. It's you owe 2,000 on an average income too, which is very
Right.
bad. It's our average income and also our retired citizens that
Okay.
owe that. I know my mom and dad, for instance, owe like $900. They're on fixed income. If my mom used to do taxes, so she's aware of it. But if
Right.
you're not aware, you don't think you're going to owe. You think you're going to either, get a little money back, a couple hundred, or break even, and then you owe $900. It really puts somebody that is on a fixed income in a bad position.
Well, or that single mom, or the fixed income, the retired couple, the single mom, the single dad, all of the above. It's
Well, and speaking of that single mom or that single dad, when they did the stimulus where they said, "Hi, do you want this extra money monthly?" where they did $250 per child,
right.
A lot of people, yeah, I want it. But they didn't realize when they go to file their taxes, you have to report not as income, but you had to report that you received that. So it reduced what you would have received at the end of the year. Because you normally get 3,000, and a lot of people got like 1,500 for one child. So it was cut in. So you get the other 1,500, but you're normally right.
So it was like an advance on your credit at the end.
Well, and if people read it right, it says child tax advance on it.
Well, nobody reads that, and I'm included. You're like, okay, yeah, take the money and run. Absolutely.
Right.
And and I don't do politics and religion and all that kind of stuff. We all have our different thoughts and beliefs and everything else. But a lot of people were, okay, yeah, give it to me. And then a lot of people were upset that they're giving this out, but they gave it out, but that person's still going to have to. So it wasn't a free gift. It was an advance.
Exactly.
Okay. So that I'm going to say to all of those that got mad about that, here's the correction on that. Because if you don't read and you don't pay attention, which I'm sorry, but most of us don't read the fine print in a lot of cases, and especially if we're getting money back.
Just to interrupt, sorry. It also not explained very well.
Right.
And I'm in the business, so I understand it a little better.
Right.
But I don't build homes. I'm not in the finance world, mortgages. That's not my expertise. So if you give me something in the mortgage world, I'm not going to maybe understand that. And that is the same exact for people that, are the automotive, the mechanic,
You're trusting me. So in my case, I'm trusting me, or you're trusting me. In my case with you, I'm trusting you for my taxes and stuff. But oh my gosh.
And a lot of people go, and I'm not knocking them at all, so please don't take it that way. But a lot go to that H&R Block or that Liberty Tax place, they're good for somebody that has a W-2 that, but go into those kind of places, because I worked there. I started because they have the best tax school, one of the best tax schools there is. Yes, I went to college too, but I worked for them to learn. That was another hands-on learning for me. So,
right. It's a stepping stone.
Yes. I mean, I still worked for the accounting company, her name was Mary Alvarez. I worked for her still, but I did that at night and on the weekends. When I would go up to get a client, they didn't say, "Hey, Terri, how many years of experience do you have? Are you sure you can handle this tax return?" They said, here's next in line. And it didn't matter if they had installment sales or, selling a business property or anything. Right. I took it and I had to prepare that return. Those people that get the first year tax preparers that don't, have never done one of those returns, it's, it could be detrimental to them. Not that I'm, it's just, I want somebody that's got years to prepare my return in those kind of situations.
Well, and I've had clients that, and my benefit is that whenever I started out, one of my stepping stones was with a company that it was family owned. They had like 7 different companies. I did payables, receivables, payroll. I did all kinds of stuff. And so I learned a crap load there as far as bookkeeping and everything else and how things are done, because they made all this money. So, okay, and that's where I learned, as far as how to do my books and, everything. Am I an accountant? Oh my God, no, that's all you. But at least I know how to structure my stuff. But to an extent, I won't say I'm an expert, but to an extent. But whenever I see clients' tax returns and like they have a rental property, their tax returns are not writing off, not including on that Schedule E, the taxes, the insurance, the all of the other kind of stuff. And so I'm like advising them.
The travel. I mean,
Right.
they take I've seen returns that don't have any mileage on there.
Right.
So what do? They sit at home all day and make phone calls to deal with oh no.
Right.
Go and buy
Yeah.
their stuff, make sure everything's tidy. I mean, I've had rentals before that we made drive-bys just to make everything was okay. And
Right.
it's there's people out there that maybe forget, maybe, I don't know, but
Yeah. But those are huge things though. Those are, that like for them, that's deductions that they're paying less taxes on. For me, whenever I'm doing monies and calculating your income, I add those things back in. And so I'm constantly advising, hey, you need to check with your accountant why they didn't do this or why they didn't do that. I'm not licensed, whatever, but this is what I know and this is what I've seen. So make sure you check into it. And so yeah, and I'm glad that we're doing this, because I think after this, it's not I think or whatever, because you've been on my mind for a while. I'm just behind in my stuff, so you and I will be talking again after this, because I need to get my stuff straight. But
you have a lot going on with both you and your
yeah, we got stuff going on.
you got
So let's talk about the capital gains. Okay. So tell us about that, and then a great conversation, and you're educating me, which is what I love. I'm doing this because I'm not only giving education to everybody else, but you're also educating me. So I love this, and now I know how to tell my staff or whatever as well, whenever I'm hiring somebody. Okay, you need to watch your W-4 whenever you're filling it out for me to take taxes out, because that's huge. And we've had those conversations, so that's good.
And if anybody ever needs help, I have a girl that works for me. Her name's Vicky. She actually, her background is HR. So so it works real well with what we do here. And she can help people fill out those W-4s. That's not a problem. We sort of have it down to a science now. She knows what questions to ask and say, do you some people don't want a refund back. Some people want to just say, hey, I want my money during the year. It's going to help me continue to live at the lifestyle I want to live at.
Yeah.
And, not get a refund at the end of the year. But that's everybody's preference. I like the end of the year if I can get them.
Okay. So capital gains. So the only thing I know about capital gains is that, do I have to pay capital gains on the house that I'm selling? I don't know if that's the only capital gains or not, but talk to us. Yeah. Tell us.
So there is capital gains on different things. Sales of stock, or stock sales, rental properties, business property, business equipment, things like that. But I think we're going to touch more on, if I sell my house, do I have to pay capital gains? A lot of people think, especially right now with the market being so high, and just a little add in, everybody, I'm also a real estate agent. I have my license. I got that just to have fun, because accounting can be a little boring sometimes. Yeah. So, when people come to me and they say, the market is great right now, I only bought my house for $150,000. I can sell it for over $400,000 right now. Am I going to pay the capital gains on that? Well, to be honest, I have to say, well, there's a lot of factors that are included in that. The factors that are included in that is, number one, the cost that you bought the house for. Yes, that is huge. How much improvements have you done? Have you put a fence around the outside? Have you remodeled the bathrooms? Have you remodeled the kitchen? If so, that adds to your basis. So that cost that you bought the house for is your basis.
Mhm.
Those improvements add to that basis. So the 150, say we spent 50,000 remodeling, and I know that is low, a kitchen and the bathrooms. How much? That's now say 200,000. Well, you sold the house for 400,000, so right now you're at a gain of 200,000. You also have to take into effect, when you sell it, the selling expenses, such as your realtor's commission, your
Mhm.
closing costs that you pay the title company, the mortgage company, and those are part of selling the home. Also, what is part of selling the home is when you go into a contract with somebody, they say home is great, they've had the inspection, but the inspector comes back and says, well, your hot water heater, there's a leak in it, or it
Right.
needs to be replaced. You negotiate with the buyer, or the seller, sorry, the seller, and have them replace the hot water heater. Well,
Mhm.
that is an expense of selling the home, because that is being required to get the home sold. So with all of that, your gain now, we'll say, is $175,000. We'll just use that figure. If you're single, you're allowed an exclusion up to $250,000. If you're married filing joint, there's an exclusion of 500,000. There's some rules that you have to meet. The
Mhm.
first is you've had to have to live in the house 2 years out of 5 of owning it. If you've only owned it 2 years, that's fine. You lived in it the 2 years.
Okay.
You also oh, my mind just went blank. I'm so sorry.
No,
You
you're good.
have to not have rolled another gain into that house within 2 years. So as long as those criteria are met, you can exclude that gain up to married filing joint up to $500,000. Now, when it's over that, then you start having to pay capital gains on it.
Okay, because I thought that it was like 250 just period. So yeah, that's a single, but yeah, you've got I knew part of, as far as the expenses and stuff like that or whatever, but I thought that it was like 250, and so I've actually told some clients I think it's 250, but you take everything out or whatever. So okay.
500 for married filing joint. You get 250.
Okay. 250 each person. Okay. All right, good to
Yeah.
know. Okay.
Now I do get, well, we sold the house. Somebody has a bad time. They have to sell their house. They sell it at a loss.
Mhm.
We all feel the market is getting ready to crash. So there's probably going to be some people that are going to have bought a high, is going to
It's
sell.
not gonna crash. Oh my God, don't let it be another 2008. My Lord.
So if that's the case and you have a loss on your house,
Right.
you are not allowed to take that loss. So just beware, if you sell, you cannot take a loss on your house. If it is a rental property, yes, you can take that loss because you've made income. You always look at it as, do I report income on a property? If it's made income, you have to report it for tax purposes. If it hasn't made income, then you don't report it for tax purposes, other than if it's over that 500,000 or 250 if you're single and you've lived in it 2 years. That's the key. You have to live in it for 2 years.
Okay.
Okay. Did that answer that question?
That did, and that gave me some knowledge and everything else or whatever. So that's good. Um Okay, let me just ask you real quick or whatever, because I was putting your information in here before I do. So the 593 number, that's the number that anybody can contact you at, right?
Yes, that's my
Okay.
office.
Okay. And then the Terri Bishop CT at Gmail.
That is correct.
Okay. All right. Just so I've got that in here or whatever while we're going. Okay. So yeah, that explained a lot on that part. And so again, a little bit more for me. So that helps me as far as that's concerned. And I think it answers, just in general questions or whatever, the same thing. Hey Linda, good to see you again. I've got Linda, which she's an agent that popped on here, and so she is asking taxpayer exchanges 300,000 into rental costing 275, and remainder 25,000 in a vacant lot. Taxpayer sells the property but has to replace the roof prior to closing. Does taxpayer expense the roof in year of sale, or does taxpayer add it to bases or capitalize it? Your opinion.
Is it their main home?
She says into a rental property.
It's a rental property. And how much was the roof again?
That part she didn't say. She was just saying that the exchange was 300, the rental property cost 275, so she's got a remainder 25,000 that went into a vacant lot. But they have to do a roof on it. So that might be something that we take off of here, but
normally
it's an expense though.
Is you would take and expensed items are like 750,000 and under. A lot of people do 500 and under, and those are like repairs. I think outside the box, I get pretty aggressive. So
we like that.
I like to take it as an expense.
Yeah. Okay.
You're talking probably $5,000, $6,500 for a roof. I'm thinking on the higher side so I would take and put it in repairs, especially if it's being turned into a rental. You're going to have some expenses, repairs.
Right. Okay. Good to know. Okay.
A rental, I would have probably capitalized it and depreciated it.
Right. Okay. Okay. So our next topic is, and we've got all your contact information in there also. So Linda, feel free to reach out to Terri as well on that. Okay. So your next thing was gambling. If we won lots and lots of money, what happens?
Oh, so a lot of people that know me personally know I love the Hard Rock. That's where and I've met a lot of people on some social media that have reached out and said, oh my gosh, I won big, or I've got a letter from the IRS because I didn't report my winnings.
Oh, God.
And I get to help them.
That would not be my case. What?
Well, go to this wonderful gambling out to Vegas even. I just got back from Vegas a few weeks ago, that you go out there and you win a nice amount. I don't know the amounts in Vegas, but I know here in Tampa that if you win 1,200 or over, you get a form called a W-2G. Normally, hand it to you right then. You win. As they hand you the money, they're handing you that W-2G.
Right.
If you win under 1,000, then it's not being reported to the IRS. So not telling you not to claim it, but IRS is not knowing about it. When you get that W-2G, that is sent into the IRS, and IRS does know about it. So yes, you do have to report that. But the key thing is, if you can itemize, you can deduct that as your gambling losses up to the amount you've won. So a lot of people do not know that. So on the Schedule A, you can take a lot of people are like, well, I don't own a home and I don't have enough interest to itemize. Well, the key thing is you take your sales tax, maybe your real estate taxes, your car tags. A lot of people don't know to take their car tags, their mortgage interest. And then their gambling losses on that. So usually that gets you over that standard deduction amount that helps reduce your gambling winnings. But you can only take the loss up to the amount you won. You cannot take more, as some of us have put more in than we've won. You can't take all your on that. So,
Okay.
but I do have a lot of questions on that. I won at the Hard Rock. Do I, how do I report this, or do I have to report it? And yes,
Right.
you do. If you've received that W-2G, you need to report it, because it takes IRS about 2 to 3 years after you filed to reconcile W-2s, W-2Gs with everybody's income. So you've gone 2 to 3 years without them, and now they're taking a lot longer. Amended returns are taking 8 months to a year to get processed. And a lot of people don't realize that either, because we've amended a lot of returns and it's taking forever. I talked to an agent, and they're over at about 3 months ago, they were 4 million returns behind.
Oh my gosh.
Yes. So, but they're about 3 years behind on reconciling everything. So they come to you and say, hey, we have a W-2G here you didn't report. Now you owe us penalties because you didn't report it, and you owe interest for those 3 years.
Yeah, they're not shy about that.
Oh no, and they want you to pay right now. You have to pay, and if you don't, but they don't have 30 days to get you your refund.
Right.
I will
all this time, and now,
so
that's crazy. Okay, so with that, okay, so if you buy scratch off tickets, and say you spend $500 on scratch off tickets, but you only win $100, can you claim any of that?
No, you don't have to claim that $100. It's not reported. Well, I shouldn't say you don't have to.
Yeah, we're like live, and we're recorded, so be careful.
So that $100 is not reported to IRS that you won that. So, okay. But you can only take the loss up to your winnings.
Okay. All right. Well, I can tell you that we've not won enough to claim it. And so I've literally stuck scratch offs aside and told my husband, don't throw them away, because I think we can claim them. Yeah, crap on that.
So, but put them to the side just in case. You never know.
Okay. And give them to you whenever I do my taxes, right? And tell you if I've won any or not.
Yes.
Okay, perfect. Okay, good to know.
I have a lotto winner, and when he won the lotto, he had a box full of scratch offs and the tickets that you buy at the store.
Oh wow.
Oh yes. He's
okay. So still stick them aside, even if you win or whatever. Does it have to be like within the same year?
Yes.
Okay.
So in 2022,
right,
you take the loss that you spent in 2022.
Okay, so that's where I say get this little envelope, and it's about half the size of a letter size.
That's
and
right.
It's a little manila envelope, and you stick all that stuff in there, including your receipts and stuff. And so I always tell people, and when I'm caught up, I do it, is I stick everything in month by month in those little envelopes. So I have 12 envelopes for each year so that everything is organized. That's really what you should do, especially if you're self-employed. But okay. All right. And then
I like that clear. You go to Staples, the clear accordion folder has the folder. I tell her, get one of those.
Okay, gotcha.
Coupon books for my big lotto winners, the gamblers. I tell them, get you the little coupon book and put your winning W-2Gs in the front, put all your expenses in the back, all your, the scratch offs, your cards, your ATM, because you go to it's not proof, but you go there, you can get a win or loss statement from the Hard Rock. But, I put my ATM to know how much I pulled out and spent. I'm not going with, money out of the ATM unless I've won.
Right.
So.
Okay, good to know, and good tips and everything else. You did mention something that I'm gonna make a note of and go back to or whatever is car tax.
Car tag.
I've not heard of that, and I know I could almost bet that I have not had that written off before as well. So, oh my God. Okay, so that's why we need somebody like you to find all of these things. And honestly, I think I talked to you probably, I don't know if it was a year ago, and I kind of interviewed you on the phone and said, okay, I'm self-employed. What are the questions that you're going to ask me? And I've not done anything since then or whatever. And so you've been top of mind. So yeah, you and I will be talking. But the thing for me is that I know my books, I know what I have, and I know, again, I'm not the expert, you are, but I know really what the basic things that should be on my taxes as far as business and personal. And so whenever I interviewed you, so to speak, I was in the car going, I think I just left a closing and we were on the phone about something else. So I said, hey, while we're on the phone, I want to ask you a couple of questions, kind of like an interview. You asked me the questions that nobody asks me. Are you, do you do this? Do you do that? Whatever the case is. And you actually asked me those questions and no one has asked me that. And that was huge for me because that means that you're going to get those answers instead of relying on me to give you that homeowner's insurance because I have a rental property. I don't, but just in that instance, you're going to ask me those things instead of relying on me that I don't know what I'm doing to give you those things. And so
I have clients in all spectrums that are like a pressure washing company that we do their books. We have a barbecue place that we do their books. We have nonprofits. I have a horse therapy place. My goal is to teach people how to save money and not pay as high tax.
right.
Not that I don't think we need to pay tax. Don't get me wrong.
Right.
But let's pay our fair share. Let's let's not get destroyed by taxes. We're small businesses. I'm a small business. I just me and my girl, my assistant that works for me. That's the way I like.
Oh, you went off. Come back to me, Terri.
There I am. Sorry, my phone rang. My son calls Tyler. So, long story short, I believe that we shouldn't have to pay a lot of tax.
Me too.
Medium, our medium income. Let's not pay. Let's let the people that make a lot of money, money. Sorry, the office doesn't close when Terri goes on a thing. So, we I strive to show small businesses how to take and do the expenses. Home, the expenses such as I have a horse running loose, I hear, in our farm. So I'm listening half and half. Sorry about that.
That's okay. We're running over, so we're running into your time now.
It's okay. It's okay. I have a little mini that thinks she's the diva and runs our farm, and I guess she is out running
the farm.
Yeah, she's running the farm. Oh, I see her. Yep. She's over with the big horses saying hello. Yeah. So, oh my gosh. But so, I like to show small businesses. You have an office in your home. Pay part of your electric out of that. Pay in your car for things. Take and use your car, gas like that. Right. So that's where I try to help small businesses, yourself, even individual taxpayers that are on a W-2. Put more into your 401k, things like that.
Okay. Well, that's awesome, Terri. You've given us a crap load of information, and again, that's, that's what it's all about. So I did share all of your information on here. And if you are on YouTube or whatever, you can subscribe. And so that, if you're watching this Coffee with Chris, then you can subscribe, make sure and give us a like and the love, and you love us and all the other kind of good stuff. But Terri, again, Terri Bishop, and your company name is MCA Accounting Services.
That's correct.
Her number is on here. It's 813-593-6608. And so she's got a lot of information. She's got a lot of experience, which you've all heard. If you are jumping into this call now, please go back and listen, because there's a lot of information on this vodcast that is for all types of people, whether, not just that you're self-employed, but for everything. And again, just what she had said or whatever that I'm kind of flabbergasted about is you can write off the taxes that you pay on a car. That's like huge too. So you can be the average person and having that, and still, as
long as you itemize, you got to itemize.
Yeah, as long as you have the itemized and you qualify for the Schedule A. So huge, lots of information. I so appreciate you being on here. We did run over, and but I thank you for your time and for being on here, and it was greatly appreciated.
Thank you for inviting me. I enjoyed it.
Absolutely.
And if anybody has any questions, please feel free to email me or give us my office a call, and we'll be happy to help you.
Okay, awesome. Thanks so much, Terri. Have a great day.
Y'all have a great day.
Have a great Monday, guys. Talk to you later.
Bye-bye.
Okay, bye.